Hello, it's Thursday the 18th of December. My name is Jack Watts and I'm lead analyst for AHDB Market Intelligence on cereals and oilseeds. With me today is one of our senior analysts, Amandeep, and the two of us are going to give you a brief update ahead of Christmas on what's happening in the grains and oilseeds markets. To start off though, let's have a look at what's happening with the grains, and it's fair to say we're in a huge period of volatility right now and a very fluid situation. In the last few days we've seen a big pickup in price, and even this morning we see prices up by around £4 per tonne, essentially in line with more news coming out of Russia, with an ongoing press conference from President Putin. So up £4 a tonne this morning. That takes actually new crop values in terms of November 15 feed wheat futures to £150 a tonne, and near market levels up to prices we really haven't been seeing since June this year, so really approaching the highest levels in 6 months. It's a very fluid situation, and really we need to consider why the market is so nervous about Russia and the situation. Well, Russia essentially is a big exporter of wheat, essentially forecast to be the third largest exporter, and the rumours happening in the market right now are taking people back and their psychology back to what we saw in 2010 when we had the Russian export ban. Any fears over the security of Russian wheat supplies essentially puts more emphasis and puts more value on the more secure supplies that are available from EU and the US. EU exports were already progressing quite quickly because we've seen quite a devaluation in the euro against the dollar. The Russian situation just adds more support to the European export pace, and we could well be looking at a record level of European wheat exports this season. Currency is part of the equation. Before it was all about the euro's weakness against the dollar. Now it's a lot about really the falling value of the ruble against major global currencies. That initial wave of volatility in the ruble made Russian wheat very competitive on export markets, but that's now been trumped by these fears of how Russian exports could well be managed going forward, and raising a fear over how secure is that supply to the global market, and does that put more emphasis on the situation in the US and indeed EU. So it's fair to say, in terms of summarising, that geopolitics are very much taking the lead, and the fundamentals of supply and demand as we head towards the holiday period are taking a backseat. That could change at any moment, and so the situation remains very fluid. Essentially, the market is very worried about how much Russian wheat will find its way to the market. This puts higher value on the security of US and European supplies, and is going to exacerbate an already fast EU export pace. From a UK point of view, we have quite a large surplus of wheat this year, not least because we have a big level of production from 2014, but of course also we have some very strong imports as well of high quality wheat. So the UK market has to work hard to compete essentially with the French price, which is very competitive because of French quality issues, and so there's a long way to go before we see any certainty returning to this market. Now I'd like to hand over to Amandeep, and Amandeep, can you tell us what's happening in the oilseeds markets?
Jack, well, one of the key things that's been hitting the headlines recently is the falling crude oil prices, and that's been having an effect on the Russian ruble as well, because obviously Russia is a key energy exporter. But a more direct influence has been put on the oilseeds market, because falling crude oil price will also affect the vegetable oil prices as well, because they're all linked with one another. So if you expect it, as the graph is showing, crude oil prices hit a 5.5-year low, so it's reached over less than $60 per barrel. And although the graph is showing that there's a bit of a lag at the moment, but you would expect the vegetable oil prices to follow, and that's because they're linked with the crude oil price. Why is that? Because of biodiesel. At the moment, if you got the option of producing biodiesel, why would you, when the crude oil price is so low? So then in that case you'd see a lower demand for vegetable oils, and that would have an impact on prices. Because oils, seed and meal are all linked with one another, that's obviously going to have an effect on the actual oilseed price as well, and possibly affect crush margins. Now for a oilseed such as rapeseed, which is more oil than meal, that's going to have a bigger effect than, say, soybeans, which has more meal. So you could see that in turn impacting oilseed values as well. So that's something to watch out for, how low the crude oil price goes, how it's going to have a knock-on effect on vegetable oil prices.
So, as we've seen over the last few minutes, the market is very uncertain at the moment, and please keep up to date with all the information on the HGCA website at hgca.com/markets.